For intraday traders, speed is everything. If you're not early, you're late. And success hinges on your ability to stay in the moment. To do this, we need fast indicators. Indicators that tell us what's happening, not what just happened. That's where the 9-period EMA comes in. It keeps us in the now. In this video, we're going to cover 3 ways to trade the 9 EMA: the conventional, the breakout, and the 9/20 strategy. All right, let's do it. The 9-period exponential moving average, or 9 EMA, is a fast indicator. It is a moving average that uses the previous 9 periods to calculate a baseline value. The 9 EMA is fast because this calculation places more weight on the most recent pricing data. This makes it highly responsive to changes in recent price action, or as we've said, very, very fast. Let's get set up to trade the 9 EMA on TradingView and MT5. First on TradingView, you're going to want to go up to indicators, cursor down to the moving averages, click on exponential, and what we're going to need to do is make sure that our periodicity is set just the way that we want it. So we're going to go up here, we're going to click on settings. You'll notice the 9 length on the close, that's our source. We're going to go ahead and hit OK. As you can see, we're plotted as a chart overlay and ready to go. Now on MT5, very similar, but there is a couple extra steps. You're going to go up to insert first, you're going to go to indicators, you're going to go to trend, and you're going to go down to moving average. Click on moving average. You're going to have to adjust the method to exponential, and we're going to go ahead and put that in as a 9. So there you go. There's your 9 EMA on your MT5 platform and on your TradingView platform. Okay, let's trade the basic 9 EMA strategy. As you can see, the 9 EMA is plotted on the chart as an overlay. This makes it simple to trade. All we do is buy the market when price crosses over the 9 EMA and sell the market when price crosses beneath the 9 EMA. Let me show you what I mean. Here's how to trade the conventional 9 EMA strategy. We buy when price breaks above the 9 EMA, we sell when price breaks below the 9 EMA, and we're waiting for price confirmation. A positive close above the 9 EMA to buy, a negative close beneath the 9 EMA to sell. Now, your trading session begins whenever you'd like it to begin. I'm going to begin mine right around that 7 a.m. Eastern, right in the heart of that New York-London overlap. This is a Euro USD 5-minute chart. And let's go ahead and roll tape. Now, right there, we sort of had a pump fake above our EMA for our buy side example here, and then right there we finally got the break above in the close, the nice close above that EMA. So let's go ahead and enter a buy side entry now. Now that we're long, we're thinking, okay, what do I have to do? I have to figure out my profit target and my stop loss. My stop loss needs to be right beneath that current swing low, that demand zone, that area of support that's set up on our price charts. We need to put our stop loss right beneath that. Now, as far as our profit targets go, we can align this at a standard risk versus reward, a 1-to-1, a 1-to-2, a 1-to-3, or we can wait for price to cross back under that EMA to get us out of this trade. So let's go ahead and just put this up somewhere about a 1-to-1 risk versus reward. Now let's roll forward in time and show you exactly how this trade develops. Right here we go up. Okay, our 1-to-1's filled, and now we're waiting for price to cross back over and get a negative close, and there it is. So if you're trading at a fixed risk versus reward, you did fairly well on your 1-to-1. If you're trading waiting for that next negative bar underneath the EMA, you did just fine there as well. The sell side is executed exactly the same, just inverted. We're waiting for a negative candle to come in, get established. We're going short. Stop loss is going to be above that current swing high. Profit target at a fixed risk versus reward, or waiting for that bullish crossover the 9 EMA. That's all there is to the conventional 9 EMA strategy. The 9/20 strategy is more advanced, but still very intuitive. Begin by adding the 9 EMA and 20 EMA indicators to your price chart. Now, the entry rules are very simple. When the 9 EMA crosses over the 20 EMA, we buy the market. When the 9 EMA crosses under the 20 EMA, we sell the market. Now, the exit rules are up to the trader. You may use a fixed profit target or exit the next time the EMAs cross each other's path. The choice is yours. All right, let's trade it. This is the 9/20 EMA strategy, very simple to execute. We're going to buy when the 9 crosses over the 20. We're going to sell when the 9 crosses under the 20, and we're waiting for price confirmation. A bullish candle close on a buy and a bearish candle close on a sell. Okay, let's go ahead and illustrate a sell on this crossover strategy. Let's roll forward in time with our market replay. We're waiting for a bearish crossover. Can we get one? And there it is. Okay, so there's our crossover developing. We've got a nice bearish close down in here. Let's go ahead and sell the market. Now, there's a couple of ways that we can execute this crossover trade. Remember, entry's only a
part of what we're doing here. First thing we need to do is align a stop loss. So you've got a couple options here. First way to do it's conventional. Put it above that previous swing high as we did in the conventional method, and then just align a static risk versus reward, 1 to 1, 1 to 2, 1 to 3, whatever you may like. We can put that down a little bit more. But what a lot of traders like to do with crossovers is they like to stay in the market until the next crossover, and that's where they exit. Now, the 920 is fairly effective at spotting those macro trends. So even on a 5-minute chart, a Euro USD 5-minute chart, we can get in potentially on a running position and get in on a nice bullish trend. A lot of day traders use this strategy to trade the market. So let's go ahead and roll forward in time and see exactly how it plays out. Okay, there's our bearish break. We got great entry on our crossover. Our profit target right there, sort of flirted with it a bit. But if we're looking at the crossover, we're still very much in the game to get in on that big bearish move. That's what we're in there for. We want that big break, not necessarily a constant break. Okay, there's a decent break, and now we're out of the market if we're on that static risk versus reward. But you'll notice now the market runs against us. Are we going to cross over? Are we going to cross over? Is it going to happen? And then right there we cross over, and essentially we're out of the market. But look what happened. We had a great market entry right here, sold with beautiful trade location. We got stopped out on the next crossover for a gain. Anytime you're getting stopped out for a gain, that's a pretty good day. So that's how you trade the 920 EMA strategy. A great way to get on intraday trends, and also a great way to enter the market to the bear or the bull. The 9 EMA excels as a trend indicator, and it's fast. That's why it's great for trading breakouts. There are 3 steps to using the 9 EMA breakout strategy. Number 1, identify areas of support and resistance. Number 2, wait for price to break out above resistance or below support. And number 3, buy or sell on a retracement of price to the 9 EMA. This is an example of a 9 EMA breakout strategy on the buy side. Price breaks above resistance, we buy the pullback. All right, let's do it live. All right, this is the 9 EMA breakout strategy. The first thing we have to do is we have to identify our support and resistance levels or a chart pattern. Remember, we're playing a breakout. We have to have a launch point, a place where the break begins. That's going to be either support, resistance, or a chart pattern. We're going to wait for a pullback to the 9 EMA, and then we're going to buy with a bullish trend, and we're going to sell with a bearish trend or a bearish break. So for the sake of this example, we're going to go with the previous day's low as being our support zone, and we're going to show you how to sell into a bearish breakout. So let's go ahead and move forward in time. This is a 1-minute chart. You'll notice there's a test of that support zone. It's holding up great as downside support. Another test. Okay, now we've broken. So what we're looking to do right now is we're going to want to sell from a pullback to our 9 EMA. Let's go ahead and roll forward in time. And right there we have it. So let's go ahead and sell. I don't know. Let's go ahead and put a little position on and see exactly what we've got and let this thing roll. Now, as you can see, we're moving in a bearish fashion, which is to be expected from the breakout. What we have to do is we have to understand exactly where to put our stop losses or our profit targets. With your stop loss, you do have some options. This is a 1-minute chart, so you can go well above the top of the bearish market structure somewhere up in here. You can also play this extremely tight, just above the current swing high somewhere in there. I don't care where you put your stop loss. What I would recommend is no matter where you do put it, it needs to be above that 9 EMA, and you need to be looking to get at least a 1 to 1, 1 to 2, or a 1 to 3 risk versus reward. So right here, you can certainly dial this in for a static risk versus reward ratio, or you can trade it conventionally like we did with the crossovers. You can stay in this position until price gets reestablished above the 9 EMA. So let's go ahead and let's slow this down just a bit and roll forward in time and see exactly what we're thinking. We're moving. We're right around our profit target, somewhere right in there. Okay, we're filled. We feel good about a profitable trade. Now, if we're letting this trade run, we're waiting for it to get reestablished above that EMA. We are still short. We are looking for a big move, a big trend, and really a way to change the game. And right there, you can see there's your close. Your bar closes above the 9 EMA. This is on a 1-minute chart. We're out at a nice profit either way that you traded it. So that's a good look at the 9 EMA on a short. Remember, to the long, it's going to be exactly the opposite. You're going to buy above resistance. The break above resistance, you buy from a pullback to the 9 EMA, and then you execute the trade in exactly the same fashion. 9 EMA breakout, pretty good way to trade evolving price action either to the bull or to the bear.
The 9 EMA is a fast, flexible way to trade the markets, and we've only touched the tip of the iceberg. There's much more to the 9 EMA. Strategies like the 930, the 9 VWAP crossover, and the 921.55 are all powerful tools in the trader's arsenal. Now feel free to take the 9 EMA for a test drive. You can use it on any market and on any time frame. Apply prudent risk management, journal your results, and you're off to the races. Now, if you have any questions, leave them below. Hit the subscribe button, and we'll catch you on the next one.